I am using one of my AirPods to do this recording, so hopefully you all can hear me a little bit better. What happened to the market last week? It was a green week. You can see that this is Monday. Monday we started here. We get up a little and then we flushed down, and then after that we continued higher. Now, can you see over here at this portion, market has failed to make a higher high over the last 3 days. So expect market to start to pull back for a little, because February generally is a weak month and they are generally directionless. Market usually rise up before the earnings, and after the earnings they usually go sideways. This is through back testing lah. Okay. On the daily chart, can you see that we have our all-time high here, previous all-time high, and then we have our all-time high here as well, which is about the same place, and you can see that 478,479 area is now a support. Okay, so once we break out of resistance, the resistance becomes a support. And like I shared in the last video, am I expecting a pullback over to this area? Yes, I am, and I'm looking for it to bounce before going long. Okay, and also I would like to draw your attention to this. Previously I drew this Fibo Extension. So can you see we start the feed from here where the impulse wave is. We go here, we have our swing high, here, and then we have our swing low here. Can you see that the market went to the one level of this wave? The one level of this wave, which is 489.4. We were just very close last Friday, which is about 489, thereabout. So what am I expecting? I'm expecting the market to start to pull back a little bit. Okay, and where can the market pull back to? Like I mentioned, is the support at 479 area. Okay. Now, if we were to use the Fibo retracement, can you see this impulse move upwards? And if we use this impulse move upwards, we have our swing low down here and our swing high down here. Can you see that the 0.5 coincides very nicely with the 479 area, 479.5, 479, very close there about. Okay, so long as the market doesn't break below the 0.618, I am not turning bearish. I am being cautious. Being cautious and turning bearish is two different things. So sorry. I'm expecting market to pull back, slowly pull back. Maybe in February, just goes nowhere, and then it just pull back for the whole of February. Nobody knows, but that may happen. And then we get ready to draw our downtrend line, wait for a bounce and break out in order to go long. Okay, I'll just remove all these drawings first. Now, can you see that we are very nicely on an uptrend? The green line is the EMA 20 on the 1 day time frame. EMA 20 on the 1 day time frame. Can you see that this is the support? Once we broke above the EMA 20, we went close by, and then after that we continue to fly. Come back here, bounce again, and then we continue to fly, bounce again, and fly. So where is the next support level? Maybe somewhere down here, where it might just go sideways to allow the EMA 20 to catch up, and then we might just bounce off the EMA 20, or we might break below, come back down to this all-time high again, and then we just bounce. So please do not be bearish the moment the candles break below the EMA 20. Always remember that we need at least 3 days below to confirm major trend change. Okay, but in this case, I would take the Fib level from the Fib. Hang on. I'll take the Fib. If you all want, you can take this impulse wave instead of this one, just to be a little bit safer. You can take this from here to here, and then you see the 477, which is 477 there about 478. That is where it coincides with our all-time high. This will be a better level of support. Can you see that this is very much a confluence? We have a 0.5 as well as the 4.77, which is our all-time high support down there. Okay. Now, moving forward, can you see that the distance from the EMA 20 to the distance of the candle is just about 2%, which is thereabout, is not too far. But at the same time, February is usually not a very good month. February usually is directionless and it doesn't go anywhere. Now, what if it breaks below this 477? Am I expecting it, to crash all the way down? No, I'm not. I would expect the next level of support that we have will be this 468 area, where you see previously it came close to bounce off, came close down, came close, broke below a little bit, and then we bounced off. Yeah. On the US 500, I call out something for all of us to watch out. If it breaks below this uptrend line, okay, can you please do not attempt any swing long, okay, if it breaks below this uptrend line. We see that this uptrend line has been a very nice support, and if it comes back down again, I won't be surprised if we start breaking lower lah. Okay, but having said so, the market can still rally because we have a lot of earnings coming up. So Tuesday, after close, we have AMD, Microsoft, Google. If 3 out of 3 beats estimate, don't be surprised that market continues to fly. And Thursday, we have Amazon, Apple, and Meta. If all these 3 again beats estimates, the market will continue its trend upwards lah. So I'm not telling you to see once it breaks this uptrend line, then you immediately swing short. No, I'm not shorting the market, because if you short the market, you would have died a terrible death. Okay, because the market is still very, very strong. And can you see that down here we are very close to the 1 level as well. So you can look at the US 500. It's a 24-hour chart that gives you more candles to draw your line. That's all. Okay, so we look at the QQQ. So QQQ is starting to pull back already. It pulls back all the way here to the recent gap fill. Now if we were to do our Fibo extension again, we see this is our swing low to our swing high, and then to our swing low again. You see that we are actually overextended already. But if we were to just draw to here, and draw to here, we are also overextended already lah. Yeah. So QQQ is definitely overdue for a pullback. I'm not saying that it will crash. It probably might want to pull back and do a gap fill at this area. If it does, I'm not surprised. But market and the earning can always push QQQ up higher, especially the earnings, AMD, Microsoft, Google, Amazon, Apple, Meta, all these tech stocks. If they report very good earnings and very good forward guidance, I won't be surprised that QQQ starts to move lah. Okay. A bit of a caution. you can see that the fear and the greed index is at 77, which is at extremely greed. Market usually peaks at extreme greed, and market usually bottom at extreme fear. Can you see the timeline? Now, where was the previous extreme greed? 26th of December. Let's go SPY and take a look at 26th of December. Where is 26th of December? So 26th of December is here. Does it crash immediately? No, it doesn't. It went up for a few more days before it starts to pull back. Can you see? So 26th of December was when market was at extreme greed, and then it went up again for a few more days before pulling back. So we are currently also near extreme greed. When the other date? 15th of December. When is 15th of December? 15th of December is somewhere down here. Yeah, before it went up again. So then it up, down. Yeah, so I'm not saying that the market will crash. The market will probably start to go sideways or pull back. And can you see that usually at about 81 level, 82 level, 83 level, that is where the market really peaks at the extreme greed level. Yeah. So please do keep a lookout. Please do not anyhow attempt swing longs. If there is a really good setup and you want to take the swing long, lower your size. Go half size or 0.75% with 0.75%. I think that is reasonable. There is no point in making 10% the last month and then losing it all in February. Trading is also about protecting your profits as well as protecting your capital. So we risk a small size, we risk 1% on a trade, but at the same time we need to know when not to even risk 1% on a trade. Okay. According to the seasonality chart, you can see that February may have one more push before going sideways, and then another push in the middle of February before plunging back down to earth. This is a seasonality. This is a guideline. I'm not saying that it will come true, but it wouldn't hurt to be a little bit more cautious now. Okay, if I will just take you all back to the previous year's February. Okay, let's see. So this is last year February. So February, 1st of February is here, and then so the opening price is here. The opening price is here, and then at the end of February, where are we? At the end of February, we are here. So can you see that market was very sideways for February? If you draw your downtrend line, your alert will not have rank. And if you draw this uptrend line down here to here, you can see that once it breaks out of this ascending support, the market starts to pull back. If we go back to 2022 February is a bit different. That's a bear market. But you can also see that February we started off here. This is the opening price, and then March end of February we were here. This is the closing price. Yeah. And then if we go back a little bit further, the start of February was here, and the end of February was here. This is our closing price. So yes, of course, if you caught this move upwards, good for you. Will SPY do this thing? I really don't know. We can only look at the chart. So we trade the chart. We don't trade our buyer. We don't trade our emotion. And so if the chart tells you that, if you see you see a breakout and SPY is making higher high. So for example, if the next few days, earnings report comes out and SPY is making a higher high above this level, 488.8 or 489, will SPY go to 500? Possibly. Let me show you why. Okay. So if we have our daily time frame, we have the wave up, swing high, swing low, swing high, and our swing low down here. Can you see that we are actually at the one level on the daily time frame as well? Okay, on a one level, we are already at the one level, which is already the completion of the wave. However, if we were to just pull the swing low, if we just take a swing low from here to here, then the completion will probably be this level, the 520 lah, and the 0.786 will be nearby the 500. So can we still go up? Can. In my opinion, we can still go up. AMD, Microsoft, Google, Amazon, Apple, Meta can push the market up. But if one of them, if especially Apple has 7% weightage in the S&P, if Apple reports poor guidance, I don't see why the market will. I wouldn't be surprised if the market starts to pull back lah. Okay, so game plan for next week very simple. If the market is sideways, there's no trade to take. If the market is pulling back, start to TP a little bit more on your swing long position if you have. You can trail the EMA 20 as your stop loss. And imagine if you just bought SPY down here. Okay, let's just say you decide that you buy SPY here, and then you trail EMA 20, you trail, and then you close it off down here. That's fine. You are still profitable. So we never know. We won't be able to sell exactly at the peak of the market because we never know when the peak is. What we can do is we either TP a bit every 5 to 10%. So after your 1:3, if you want to trail, you TP a bit every 5 to 10%, that's fine. Or you use your EMA 20 to trail your stop loss. And that's perfectly fine lah. So for those of you who followed me on my AMD trade, so it's already already hit 1:3, which is this top green line 181.7. Am I going to pull all out at this 1:2? Probably not. I will just leave it to trail EMA 20. Okay. Also note that there's an earnings down here. I usually try not to play earnings. However, you can see that from the closing price here to my entry price is about 12% away. I am okay even if the 50% it goes back to my break-even price. I'm fine. Yeah. So otherwise I'll just trail EMA 20 the whole way lah. So for next week, just take note. VIX is also getting quite close. We have about $1 away from this 12.45, and if it reaches here and it bounces off again, I wouldn't be surprised, that market starts to pull back lah. And you can see if you start to draw your trend line like that, and if the candle breaks above the trend line, that's the time when market is going to pull back.